Oh, we had after the first 15 minutes or so, first 10, 15 minutes, we had a congestion box at 93 and then 85. And it couldn't get out through the top and it couldn't get out through the bottom. And I thought this was the best chance to clear the bottom right in here. But there was real no good qualifier to go. Thought it could go because it's not just going to hold forever. The more you see a price hold, the less likely it's going to continue to hold. If there's nothing you get out of all the videos I do, remember that at least. The more a price works as support, the less it's going to continue to work as support. A great way to picture that is if you're running into a door trying to blow that door open. Every time you throw your shoulder into it, the hinges are getting a little loose, a little bit more loose, a little bit more loose until it finally busts open. So this is the bust open, but I thought they had a chance to go down, but we don't qualify it. We could disqualify it so we don't get stuck. Up in here was a qualifier that it's finally going to pop and it's going to release. And so it's the breakout trade. Now I'm going to play this and I want you guys to show me. We'll come down here. That's what it looks like on a footprint. I want you guys to show me what you could have seen to say that is a win moment to get long and see this thing go. And it's just navigating, still can't get through 93, still can't get through 93. Where would there have been a win moment? And there it goes, releases up, up, and away. But where back over here could there have been a win moment? Now you're anticipating it. If it gets above 93, it's going to go up. And I'm playing this along slowly. Where's the win moment? You could see shorts coming in and try and also get out. That's one. You see it just get balloon out. This is what you need for upside. People selling the 93s thinking it's going to work forever. And then it flies higher, stumbles around as longs come in, but then releases again all the way up to a 760 lot big sell order, which is generally a magnet. That was a big seller. Here's another thing that happened. Let me show you the NASDAQ in the upper right of this screen share. Upper right. Take a look at what it did. At the same time, the S&Ps went through 93. Take a look at the NASDAQ. What do you see? And I even told guys, listen, right in here, if we get above this 50 area, what was it, 46 to be exact, right in here. If we get above all this consolidation, they're going to run it. And let me just play it. There it goes. Pop. This cannot surprise you. This is predictable, but you have to anticipate it. The same time this was going to blow out through the top of this range, the ES blew out through the top of its range. Let me draw it up so you could see it. Here's the top of the range. Here's it's blowing up through it. Here's the top of the range. Here's it's blowing up through it. All right. Now let's back it up. Those circles are going to be off, so let's get rid of them. Let's back it up. I'll stop it as soon as it starts to break out through the up. Boom. In fact, if you look over here and you look over here, they both go through the top of their consolidation box at the same time. You could anticipate that that's going to happen. You could have got on the right side of the market predicting that that was going to happen. The chase is on. More buyers, less sellers is what makes price go up. And now you had two markets confirming that. That's why you don't have to trade more than one market. In fact, I would never advocate trading more than one market too often. You get too distracted, but you have to be able to watch more than one market. You have to be able to watch more than one market in order to get a full sense on value, on confidence, on being comfortable. So if you're not watching other markets, it's hard to accurately value price. You compare and you contrast all the time as a consumer your whole life. You're always comparing one thing to another to find value. It's really the only thing banks use to appraise a house, compare, contrast. To find the value of a car at a good price, compare, contrast. So everything has a market correlation or relationship. Your job is to find those correlations and use them in your ability to build out your idea, your scenario, your timing, your bias, your location. So keep that in mind. A couple good things were happening here. The identification of the top of a range congestion box right up in here. The fact you had it in both markets. The fact that you had shorts starting to get stuck right in here. So predictable moment. And always think that any edge or advantage that you're looking for in this business has to have a window that allows you a probability to predict what's going to happen. If it's not a window before it happens, then all you're doing is using price to predict price. All you're doing is telling me it's going to rain after I'm wet. If that's what you're doing and those are your tools, you're never going to find consistency. You have to be able to predict what's going to happen next. And then when it happens, it's highly probable, but also not feeling like a good guess. It doesn't feel like it's random because it's not anymore.